Well, it is like nothing I have seen in the past, but it is bringing everything I love together. So this idea of Bitcoin being a new, a global monetary system, that fits right into my economics. Given what we're seeing in the private sector in the U.S. And hearing from state treasurers who we're working with, the movement is already started. Now, for example, the state of Wisconsin, I believe, has put a number of, they're not self-custodying Bitcoin or anything, but they have put some of the spot ETFs in their pension plans. And, that to me speaks loudly. We're also seeing bond funds. I wouldn't think they'd be the first to embrace Bitcoin. I think of bonds in a different way, but they've been in a world of hurt recently because of Fed policy. And so bond managers are starting to diversify into Bitcoin. There was one very visible one, I've forgotten the name, but the 13F filings came out, and we're beginning to see, actually, it was very interesting, for every manager that added gold in the last quarter, 10 added Bitcoin. So both of them through ETFs for the most part. That was illuminating. That was illuminating.
Forget BlackRock, Fidelity, and the largest institutions in the world. With the introduction of the Bitcoin ETFs, we already know that the biggest institutions in the world are inevitably coming for Bitcoin. It's already begun. What's coming next for Bitcoin is state treasuries like Wisconsin and more nations such as El Salvador adding Bitcoin to their balance sheets. That's the latest message out from ARK Invests Cathie Wood. Earlier this year, Cathie Wood and ARK Invest released their research on Bitcoin as it relates to institutions. What they found was that if institutions added Bitcoin to their portfolios, it increases their returns whilst reducing their risk. This is all because of modern portfolio theory, in which it is known that you can combine uncorrelated assets together to increase returns and decrease risk. And because Bitcoin is correlated to no other assets, it's perfect for diversifying portfolios. ARK Invest projects that Bitcoin could hit $2.3 million per coin if institutions allocated the optimal amount of money to Bitcoin. In her latest interview, Cathie broke down why it's this logic that makes Bitcoin inevitable, not only to institutions but also states and nations. Before we jump into the video, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing and turning on post notifications. It's free and you can always change your mind. But without further ado, let's jump in with Cathie Wood.
Well, it is like nothing I have seen in the past, but it is bringing everything I love together. So this idea of Bitcoin being a new, a global monetary system, that fits right into my economics. Art Laffer and I have been, he's been so excited about this since we did our first white paper in collaboration with him in 2015. He's become so excited about it that, he just joined me in El Salvador to meet with President Bukele to advocate for, not only help. He doesn't need any help on the Bitcoin side of it, but on the economic side, you get economic reform, educational reform, Bitcoin and AI, working together, converging, and you have an explosive opportunity there. So, but global monetary system. So it is that Bitcoin, technology, the layer of the internet that really developers forgot in the early 90s because they had no idea that commerce, financial services, what have you, would take place on it. And then a new asset class, 3-in-1. There's never been anything like this. I think that President Bukele is leading what I believe will be a movement by more enlightened leaders in emerging markets who are trying to break from the past and, the horrible cyclical and hugely cyclical booms and busts, and especially devaluations, which is a very relevant topic today. I'm shocked to see the Nigerian naira plummeting 50-60% over the last year or so. The Egyptian pound dropping 40% in March. I mean, think about how crushing that is to purchasing power and wealth of individuals. And so Bitcoin, and I know I don't have to tell this community, really is an insurance policy against what that is, which we believe it's confiscation of wealth. So I think it's becoming more and more relevant. The dollar's been going up. The dollar is up a lot in the last 10, 12 years relative to most currencies. I don't think many people understand how much it is up. And that is, debilitating to some of these emerging markets. And so, Bitcoin couldn't come around at a better time. If you have an internet connection and a smartphone, you have access to this insurance policy. And I think more and more individuals are going to take advantage of it. And the smart leaders in these countries are going to put a Bitcoin on their balance sheets because one of the devastating consequences of reserves running out is the IMF comes in and does all the wrong things. It raises tax rates. It cuts spending at a time when countries are already reeling. It's a failed strategy that they, it is their go-to. And I don't understand. If I were a leader in an emerging market, and I think even El Salvador is looking for funds from the IMF. But if I were a leader in an emerging market, I'd say, okay, well, this really doesn't work, in terms of moving countries in a healthy way out of distress. It does longer term. If you give them money and control everything, then, something will happen, something will change, but not the right things. It's not a market-driven approach. Given what we're seeing in the private sector in the U.S. And hearing from state treasurers who we're working with, the movement is already started. Now, for example, the state of Wisconsin, I believe, has put a number of, they're not self-custodying Bitcoin or anything, but they have put some of the spot ETFs in their pension plans. And, that to me speaks loudly. We're also seeing bond funds. I wouldn't think they'd be the first to embrace Bitcoin. I think of bonds in a different way, but they've been in a world of hurt recently because of Fed policy. And so bond managers are starting to diversify into Bitcoin. There was one very visible one, I've forgotten the name, but the 13F filings came out, and we're beginning to see, actually, it was very interesting, for every manager that added gold in the last quarter, 10 added Bitcoin. So both of them through ETFs for the most part. That was illuminating. That was illuminating because we're at such an early stage of institutional involvement with Bitcoin as opposed to gold. And I also think, I'd like to think that our study, as we were trying to reach institutional investors, our study basically shows that because Bitcoin has such a low correlation to other financial assets, that and because we believe it is a new asset class, that any institutional investor now that the SEC has given, this wrapper, at least the ETF, the green light to hold Bitcoin, every institution has to consider it, because it's now a matter of, okay, what's your competition doing? If when there's a new asset class that has a low correlation of returns to other assets, what that usually means is, if you add to your existing portfolio a position in Bitcoin, that over time your return per unit of risk is going to be higher than the competition. So it will become a competitive dynamic out there. The odds of higher risk-adjusted returns for a given portfolio, if you allocate a position to Bitcoin, that resonates. Mm-hmm. That resonates. I mean, in the early days, our first white paper was in 2014, the year we founded ARK, and we were facing ridicule and all kinds of it. I mean, in 10 years, the flip has been amazing, and I do think what's happening as well is what's going on in Washington. So Fit 21, I'm not quite sure if that's the nickname for it, but to have 76 Democrats sign on to that, including Nancy Pelosi, it's like, what? I mean, that has awakened a lot of people to its broader acceptance, instead of this kind of radicalized form of money, which is how people were thinking about it in the old days. Now, new asset class, good for our citizens, freedom, lots of our values. Very interesting. For many people, it's this year is a one-issue election. Mm-hmm. And I think that vote spoke loudly that, okay, there was this dynamic, Democrats against, Republicans for the most part, and now that's changing quickly, so quickly. And I think President Trump saying the things he said recently, but also taking campaign contributions in crypto, trying to reach the community, that's also quite significant. I guess Satoshi really understood this dynamic. I'm kidding. I'm not sure if he or it or they, thought about that. But there is something called in equity markets, actually, it's the first project I ever did when I got into the business. No, this would have been the first more economics, political project I did. Because the first one was about Hong Kong, 1997, but was this 4-year election cycle and how the equity markets trade around the election cycle. And so I pretended that the 4 years were the equivalent of 1 year, mm-hmm. and applied seasonal adjustment, the census at the time it was X11, to it to find out the seasonality. And there definitely is, quote unquote, seasonality around the 4-year presidential election cycle.
So there's Cathie Wood's insights into the future of Bitcoin. If anything is clear, it's that institutional interest has only just begun. With state treasuries and nations potentially adding Bitcoin to their balance sheets, we are on the brink of a financial revolution. As Cathie and ARK Invest project, Bitcoin has the potential to reach $2.3 million per coin if institutions allocate the optimal amount of money to it. This isn't just speculation, it's grounded in modern portfolio theory, which shows that adding uncorrelated assets like Bitcoin can increase returns and decrease risk. Now guys, if you're watching this video, you're clearly interested in crypto. If you want to stay up to date with the latest in the crypto and Bitcoin world, don't forget to subscribe to our daily 5-minute crypto newsletter. It covers expert predictions, breaking news, and top on-chain analysis, all in a nutshell. Click the first link in the description to join over 60,000 others in becoming a better crypto investor right now. Thanks for watching, and we'll see you all in the next video.